Hey traders, Michael from Elite Traders University here. Hey, in this video I'm going to go over 3 tips or hacks that have really helped me become successful and consistent in my trading. And these 3 things are things that most retail traders will never do because they're taught to trade the wrong way. Now, the first, which you maybe not have considered, is never chase a trade. Never chase a trade. Now, the reason for this is that the banks manipulate the markets, and often they can manipulate them to go in different directions, and so unless you understand what the bank's actually doing, most traders will end up following the market and reacting to it rather than having an objective strategy for the entry or a precise edge for the entry. Now, I'm going to illustrate this on one of my trades from last week. And here's a great example. And so we're looking at the London Open, and what we notice is that price pulled away very, very quickly down before the open. And it broken through this sort of a trend line here. There's a pivot in there. So it's sort of broken down. And if we look at it from this perspective, it looks like we're breaking down to the support and possibly even lower. Now consider that we're also in a higher time frame downtrend. If we zoom out a little bit, you can see that we are in a clear downtrend. Okay, and so when price starts breaking down with all of these large ring candles, there is a lot of selling activity here, and what happens is a lot of traders will actually sell, and actually you can make money as you sell down here. But if you're chasing this and trying to keep a tight stop, what happens? The banks turn it around and it goes higher. So when you chase a trade, you have a 50-50 chance of it being successful. Yes, you can flow with momentum, but often when people start chasing a trade, often it can turn around very, very quickly. So that's lesson number one. I encourage you, never chase a trade. Now, number 2 is something that is probably one of the best investing tools that I've ever learned in my life, and it is buy low and sell high, or sell high and buy back low. And think about if you're going to buy a car. If there was a Ferrari that was worth $1 million, and if you went down the road to another salesman and there was the same Ferrari, the same year, the same condition, for $750,000, which one would you buy? Now, obviously, you would buy the cheaper Ferrari because you will be saving $250,000. So why, when we approach trading and investing, do we do the opposite? Why do we buy high and sell higher? Now, yes, that can work, but only in a very, very strong trending market, which has a lot of momentum. So one of the greatest, possibly the greatest key that I've learned in trading is to buy low and sell high. And so again, my understanding of this setup the other day was that we were going to move higher into the first half of the session. And so when London Open, there's no way I'm buying here, it's too high. I want to wait for price to be discounted before I enter my position. And so I waited for a sell-off, then I bought back in, and then price rise, and then I sell high. Okay, now this seems very, very simplistic, but this is one of the greatest keys to getting asymmetric reward to risk on your trading account. Okay, so it seems very simple, but I encourage you to buy low, buy when price is discounted, and sell when price is high. Now, number 3 is never second guess your own analysis. Okay, and again, this seems like something we wouldn't do, but often what happens is that we analyze the market, and then what happens is we see a tweet, or we look at a website, or we see some news release, and we think, okay, maybe price is doing something differently. And what I've learned is to trust my own analysis, because normally I am right the first time. My first analysis of a setup, including the larger time frames with market structure, usually that is the most objective view. Okay, it's the most unbiased view. I'm coming to this analysis with no previous bias in my mind. or reasoning, and normally it is the best analysis. Okay, so I encourage you, never second guess your own analysis. Don't follow the opinions of other people. Have a strategy, have an edge, learn when to get into the market, and stick with that analysis regardless of what happens. Understand your predetermined risk, where you know the possible outcomes if your trade goes against you, but never second guess your own analysis. Do not listen to other people. They are looking at the market through their own filter. You need to be able to trust your own analysis, your own setup, your own strategy, your own edge, and learn to trade that with confidence. If you do that, then you will massively increase in your consistency as a successful trader. For me, when I enter my edge each day in the market, I don't listen to any websites, I don't watch any news, I do not listen to anyone else. I trust what I do because I know my strategy has been back tested, it has a proven history, it has a very, very high win rate, and I trust my analysis. I trust my own ability to read the market and understand what the banks are doing. So these are three things I want to encourage you to focus on in your trading. Again, never chase a trade. 2, buy low and sell high, and vice versa. And 3, never second guess your own analysis. Okay guys, have an amazing trading week, and I'll catch you again next time.